Okay, the purpose of this section is called the gap. I want to show you the gap. This is a simple chart that shows the gap. It might be more appropriate to call it sometimes a spike, but each one of these dashed lines represents the end of one day and the beginning of a new day. So you can, if we start over here on the left-hand side, you'll see what the closing price of one day is, and it spiked up even off the screen the next morning. The next morning it spiked up off the screen. So that strategy would be to buy in here and then make a prediction that say, hey, tomorrow it's really going to go up. And then sure enough, you put in an order that if it goes up above a certain price, it'll sell automatically. And so you put it in there and you would sell in here. In this case, the closing prices are right in here. The last hour of the day, half hour a day is better. This is the where you'd do what they call a short sell. Has nothing to do with margin or anything like that. It's just weird. You can actually sell before you actually own. So here you would do a sell, and the stock program hopefully would tell you, hey, it's going to go down tomorrow. So you put an order in that if it goes below a certain level, the next morning it will sell it. But you can see it. The biggest change in the day is from the end of one day to the beginning of the next. Here is end of one day, beginning of the next. It goes down here. Here's a huge one, end of one day, beginning of the next. And you can pick up any stock. Let's look at another one. Matt. This is Mattel. Again, you can see starting over, I guess, this side, end of one day, beginning of the next. End of one day, beginning of the next. End of one day, beginning of the next. Here's what we're trying to get. Okay. So now I want to show you my stock program. This is Mattel again, and it has all my fancy lines in it. So down here you'll see my composite indicator, and if this is all you use, that's fine. There's actually two composite indicators. I'll get into that later, but you'll notice that it has largest down and any down. So this is what it's predicting. So if you can imagine yourself being here on that day, end of the day, and these indicators show that, hey, it's going to go down. So what you do is you put in your short sell here, and you enter the market, and then you put an order in to exit the market the next day when the price goes down to here. Same thing in this one. There's only one prediction, so it's not as good as the other one, but you can see the one that's there says it's going to go down. So here you are, and the price went down initially. Anyways, this is opening introduction called The Gap. Now you know what the gap is.